Good morning or good day to everyone. It's great to have you on today again for Good Investing Talks. Today I'm talking to two men from Korea. It's great to have you on, Albert and Chan from Petra Capital. You're currently in Seoul, or?
That's right. Thanks for having us today, and good morning to you and good afternoon to us.
Yeah, thanks for having us.
It's great. You invest for Petra Capital, but before we go into the investing stuff, let's take a look at some maps I brought for you. So let's start with this map here. This map is taken from a report of Goodwater Capital. If you want to read the whole report, that is on Coupang, a Korean internet company. You can find it in the links below. So this map shows the total inhabitable land of South Korea. To describe it for the people who listen to the podcast only, South Korea is approximately the same size as Indiana, but the livable land in South Korea is only roughly the size of Rhode Island, which is only a 20th of the size of Indiana. So it's quite interesting to observe this. There's also another version of this map. You can see it here. It's a breakdown of the usable land in South Korea. It's quite interesting to see this as well. So to put this in a question for the beginning of our conversation, what is your take on this map?
Yeah, as you can see, it's a small piece of land where everybody is living together. So for long history, there was a huge emphasis on sort of living together peacefully. So Korean people in general, there's a huge emphasis on civility and trying to live peacefully together. At the same time, because they're all living in a small space, they have to look what other people are doing, and you have to find an edge in sort of a super competitive environment. So in that sense, I think the education was one thing that people found a way to have an edge.
So when I actually look at the map, as Chen explained, actually about 70% of the land is mountains. But without mountains, if you think about the size of the South Korea, the population density is one of the highest in the world. But if you just look at all the inhabitable land, the population density is really high. And that's why Korean people live in a very crowded area that actually make us very competitive environment. So always that kind of environment has pros and cons, but somehow it creates that competitive environment, creates a lot of strong companies, competitive companies, and also the current phenomenon, the Korean culture, pop culture, that also from that type of environment. So if you look at the area around Seoul, it's really a lot of people. They're very high, the population density there.
Yeah, so South Korea has 50 million people, and then about 20 million of them actually live around Seoul. Seoul has officially, I think, 11 million, but if you include the satellite cities, it's nearly 20 million. So it's a very small place with a lot of people, but most people are concentrated living in around Seoul, which is the capital.
And think about the land. It's very small land, and virtually South Korea has very little natural resources. And if you think about the 1950s, when we had a war, Korea was one of the poorest countries in the world. And we had to focus on education. That's probably one of the reasons why Korea has developed so rapidly over the past several decades.
How do you think about infrastructure in Korea? I've heard Korea already has 5G rolled out everywhere. Is it with this living structure easier to roll out something like 5G in Korea? If you're, for example, somewhere in the east in the woods, do you also have 5G there? How do you think about this?
Yeah, of course, it has something to do with the government policy. But again, the population, a lot of people live in a very crowded area, but easy to outlay this kind of infrastructure. That's part of the reason I always think that way.
And also, Korea is always known for having a strong manufacturing sector, having high technology. So that, yes, it's small. The land itself is small, but, they can create these towers and the lines rather quickly. So it's a combination of the land size and plus that the Korean, in general, the industry was already developed so that they can quickly build these things. So, I don't know whether this is a good example, but I have a sister in U.S. and she's going through the sort of renovation of her house, and she was complaining that it's taking forever, and asked her like how long did it take? It's almost six months for relatively small house, but something like that in Korea would take maybe 2 weeks. So there is that so there is that tendency for people to work very quickly, and then there's that emphasis on doing things done quickly with I guess that means you also have the craftsmanship.
I think you had often visitors from outside of Korea coming the first time to the country, like from Europe or the US. Is there anything they notice that is special about the country that outsiders often say to you that they haven't thought about this when they're coming the first time to Korea?
Yeah, so for example, obviously it is like an island. You can't go to the north. So the shipbuilding, for example, was the one industry that was very developed early in the Korean industrial development times. Just right after the Korean War, when everything was pretty much reset. So shipbuilding was one, and then based on that technology, we moved on to a lot of construction industry as well, because after Korean War there was nothing, and so transportation, machinery, and things like that were probably earlier industry that was developed from the modern Korean history.
Is shipping still a topic in Korea? Are there still ships produced?
Koreans are still considered to be number one shipbuilders. They make, of course, there's Chinese. They're making strong competition, but all these very highly sophisticated ships are still made by Koreans, so they're still number one in the world. But luckily for Korea, I mean, the shipbuilding is no longer that profitable, and so maybe the beginning was more shipbuilding and automobiles and things like that, construction, but now Korea has developed into other more sophisticated industries like EV batteries, semiconductor chips. Probably heard about Samsung and LG, for example. So I think it started from maybe shipbuilding and other construction related, but nowadays I think that maybe built the base, and then now I think Koreans are generally pretty competitive in all different type of technology or infrastructure related sectors, in my opinion.
So Korea is mostly known for high tech, not the shipbuilding type of manufacturing. So it's you mentioned 5G, and if you ever visit Korea, you'll see a lot of the technologies already installed in all of the places, just everywhere, even in house and subway systems everywhere. It's all high tech, and it's a high tech country basically, I think.
We will come to stocks and investing soon, but I did get so many questions that I still want to talk a bit about the macro perspective, and you want to say it like this on Korea. There were questions coming about the relationship with the North. Like, is there still any economic relationship, or are the two countries really clearly separated?
Basically, two countries are almost completely isolated. And for a time, we had in North Korea, at a certain place, we had the special zone where Korean companies can operate, but it's closed now. And virtually, it's totally separate, isolated economy.
In fact, because of the North Korean attempt to build the nuclear facilities, basically it's sanctioned by U.S. and other countries, and therefore I think it is illegal for any Korean national to do any type of business activities with North Korean at this point. So there's, I think, as far as I know, there's zero activity between South Korea and North Korea.
If the unrealistic scenario happens and North Korea decides tomorrow that they want to reunite with South Korea, what would that mean? What would be the impact of such a reunification?
I think emotionally, a lot of most people probably would welcome reunification. But at the end, if you think about the disparity between North and South and economically and culturally and everything, we might have a problem about the merging these two totally different cultures and economies. But initially, people probably will welcome. That's, I think, at least.
Yeah, I mean, it's a tough question, right? But there's no doubt that most people in Korea, South Korea, want this unification to happen eventually. But as Arbor mentioned, the difference between South Korea and North Korea is huge now. I guess it's much bigger gap than East and West Germany before the reunification. So what's likely to happen is if somehow the leaders in North Korea decide to reunite with the South Koreans, it will be more like a step-by-step approach. Maybe start as a people with certain, visa or business reasons, they can travel first, and then, they'll take a probably slow process to become full reunification. But in the longer run, of course, South Korea is rich, but North Korea is one of the poorest countries in the world. So this will be a financial burden on South Koreans for a while. But for the long term, I think once the reunification does happen, then, the Korea becomes suddenly, with now 70 million, 75 million instead of 50 million. And then it's no longer an island. There's a, straight path to China through North Korea. And there's a cheaper labor in Chinese or in North Koreans. Plus, South Korea has zero natural resources, but North Korea is known to have some precious metals and some resources in their mountains and in their land. So this could be a boon for South Korea or Korea in general in the longer term.
Now let's move more into stock market topics. I heard this interesting story about Korea and its relationship to Western investors, that there was a phase many Western investors were coming into Korea because they liked how cheap some stocks and net were, and they bought them, and more came and more bought. And finally, they went back to the value they had before because it were only Western buyers buying up these cheap stocks. This leads me to the question, how is the stock market culture in South Korea? Is there an independent stock market culture? Do you have new trends like we have in the West with Robinhood or Trade Republic, that people buy more stocks? There's more domestic interest in stocks. Or how are things going at the moment for the stock market culture in Korea?
But historically, Korean market has moved in tandem with other emerging markets. But you just mentioned Robinhood, that type of phenomenon in the US. And after the pandemic last year, the Korean market has similar phenomenon as well, because we have the last year, the Korean market performed, actually the performance was one of the best in the world last year, and it's mostly retail driven. Foreign investors sold stocks and Korean institutions also sold stocks, but retail investors, it's the same until just now. So that is a big change. Before, the Korean market was swayed heavily by foreign investors and institutions, but now we have large amount of retail-driven trading volume. Maybe it won't stay as much as now later, but it won't, at least as we think, it won't go back to pre-pandemic days. So it's actually a big change.
And for the viewers who are not familiar with the Korean market, you saw the land is small, there are a lot of mountains, but we have very active stock market, which is now the total market for Korean stocks is around the 2.1. So that makes the Korean stock market to be 11th largest in the world. So it's actually bigger than Switzerland, and it's about similar size to Germany. I think Germany, I checked last time, was maybe 2.2. So Germany is a little bit bigger. German stock market is bigger, but the Korean market is quite large, and definitely bigger than Australia, bigger than Brazil, and Italy. I mean, Italy is now sort of shrunk a little bit, but and there's a lot of foreign players as well. The 30% of the market participants are international investors. So before, so they are a meaningful share. And you mentioned the American investors, so they come and go in and out depending on the global situation and so forth. But now the Korean retail is also a strong player, as Arbor mentioned. So I think traditionally, the Korea was more influenced by foreign inflow or outflow, but since the pandemic and maybe going forward, I think there will be more, I guess, stability within Korean market in terms of foreign inflow and outflow. And I say that because Korean people in general, they're overall, I mean, they have a lot of wealth, a lot of capital to invest, but prior to a few years ago, most of Koreans were investing in real estate. And I think that's kind of true for a lot of Asians, but I think there's definitely a lot of money to be invested in the stock market. And it's as the country develops further, people begin to realize the best way to, increase your wealth is investing in equities rather than real estate or non-growing assets.
Do you have a rough number how many Koreans hold stocks? In Germany, it's I think like 10 to 20%, so not that many stockholders.
For Koreans, technically the largest investor in Korea is a national pension service. That's like a national pension for everybody, and they represent like maybe not nearly 5 to 6%. So that means basically everybody's investing in the stock market, right? Because we have a national plan, and everybody's tied up with that performance of that NPS. But I can check the numbers, but I would say the number of people that own stocks, I mean, that could be like, the big investors versus like the young people, they own maybe 5-6 shares of, Samsung or something, but it's quite a high number. I think it's definitely more than the German number. I would say maybe 40%, roughly, but, I don't have the right number with me at this point, but I would say probably more than 40%, especially after the pandemic.
I had some questions coming from private investors, how they can invest in South Korea.
The best way is probably to invest with us, I think.
I know that answer would come up, but if you just want to buy one stock, do you have an idea how to do this?
Okay, maybe I can step up a little bit. For a foreign investor like yourself, individual, you're kind of not allowed to invest in Korea. I mean, that is a big hurdle, because to be able to invest in Korea, you have to apply for what's called a foreign investor ID. So Tillman, you get up in the morning today, suddenly I want to invest in this Korean K-pop company. Technically, you cannot, because you need to be registered with the government. So, what you could do is you have to go to your broker, maybe Deutsche Bank, and then they'll, make you make the application process for you. But typically with those banks, unless your initial amount is large enough, they won't go through that process. So that means not a typical, like Robinhood type investors, even if they know what company to invest in Korea, or they have some sense of what to invest in Korea, they cannot. So that is a big hurdle to begin with. And then once you go through the process, typically, you need to invest X amount of money to help these brokers to get this Korean ID, then you can actually, with the click up button, you can trade in any stocks. Actually, if you want to get the ID by yourself, you could do it yourself. You can go to the Korean government site and do that, but it is hassle. So a lot of people actually end up being discouraged from doing it. But like I said, Korean stock market has, many companies, like over 2,000 stocks. There are some big companies like Samsung and LG and Hyundai Motor, for example, but there are many small cap companies as well. Over 1,500 companies are below a billion market cap range. So there are a lot of choices. So it's hard to say, which, I don't want to say you go for one stock or the other stocks, but it all depends on your, I guess, risk appetite, and then what kind of, investment horizon you have with this opportunity.
So how do you go about selecting the stocks you have in your portfolio? I think you hold 20 to 30 stocks. How you go about picking them?
Yeah, we take, of course, we cannot just look at every company in an alphabetical order. That's not possible. So we have more than 2,000 stocks listed. And so we have our own screening tool. We narrow down the list, and from among those 2,000 stocks, about half are probably not investable. So basically, our universe is start from the 1,000, and we narrow down that list to more undervalued, more competitive companies, and we go through that process, and we always have some companies in the pipeline, and from there we just start the research.
So when Albert says not investable, that means they're either losing money or they're too small. So you have to understand, Petra, we're mostly now, managing institutional money, clients' money, and there's when you manage those kind of money, there's liquidity constraints and things like that we need to abide by. At the same time, because we're a value investor, and then basically we have a long-term investment horizon, we don't trade that often, meaning like, every firm has different style, but I'm sure you're very familiar with the value investing style. It takes a bit of time for us to research and find the company. But once we buy, we tend to be a holder for a longer time, because by being value investor, whatever we buy at this point, it's not probably the market's favorite stock or favorite positions. So therefore, given our sort of the investment style, given our client base, we have sort of rooted out what's investable versus not investable. And given that Petra has been in business over now into 13th year, and then we have invested in Korea even before starting Petra. So we have a pretty good sense of what are the good companies versus, sort of the questionable companies, not only just in terms of, profits and loss, but the governance and then the management skills and so forth. So we do have a pretty good short list that we review, whenever possible. At the same time, we are always looking for new ideas. So we look at the new IPO companies, and then look at the corporate events, and then so we're very keen on what event could change the valuation of the company.
So basically, we have, of course, we have a set process, but we are in the business of buying undervalued companies, undervalued stocks, and undervalued stocks could be just everywhere. It changes from time to time. So, of course, we have our own set of formula-based approach. But again, we just look at everywhere. We look at our existing portfolio companies, and we are very curious. We just look at all the related companies, their suppliers, their customers, and so we read a lot. So there could be many different ways to find undervalued stocks. So we just try to do many different things because it could be random sometimes.
Yes, I know that you mentioned the net nets, but net nets is, like I said, it's easy to see, right? Because anybody can run the numbers, and it's trading below cash value. But that means the fact that these companies are staying that cheap for a long time, that means there's something wrong with the company. So we actually find a lot of net nets to be, as your American friends have, concluded at the end, there tend to be terrible companies or declining businesses. And that's why they're trading cheap. Although from time to time in that net bucket, we can find some misunderstood or mispriced companies that shouldn't belong there. But those, we could always invest. But just going into nets and looking at the matrix, low PB, low PE, I don't think that would be the right approach, because there's so much competition going on. There's a lot of people participating in markets. The quantitative aspect of the companies and stocks are important, but we think that there's a lot of value in analyzing the qualitative aspect of the business, and that's where actually the real intrinsic value comes in.
You mentioned that there are questionable companies in South Korea. How do you avoid them, and what practices you don't want to see?
So when we mean by questionable, it basically mostly the business itself. So some industries, obviously, they face declining fortune, and that's probably why they trade at a very low multiple, and that type of things. And so, of course, in just like in every country, sometimes some companies have some problems in accounting and the management. But basically, the most companies in the net, they have a very difficult the business outlook. That's probably what we mean.
And also, when I say questionable, I mean it's maybe not the best term to use, but like biotech companies, for example, if the companies continue to lose money, but for some reason people think that there is a small probability that they could make some new hit drug that could be distributed to global markets, to us that is questionable business model or questionable. So of course, those companies could turn out to be a home run, and for some people that may work for them as a potential target company. But given our tendency and given our sort of disciplined approach, we cannot bet our investors' money on unproven future cash flow. So that's what I mean by questionable. So that's both the companies that are only trading on hopes, and also the companies are cheaply valued, but if they're declining and they're going to lose out to Chinese, or they only have one customer, maybe like one example, I mean, we mentioned shipbuilding, but maybe a vendor that works with one large Korean shipbuilder, I mean, the outlook is not that good. So those companies, we just do not view them to be investable.
You already mentioned governance, and I've brought you another chart I want to show you. It's the ownership structure of Samsung for the people you listen to the podcast. It's a very complicated chart with cross-holdings and arrows in some directions, and it's hard to understand and hard to grasp. So let me start with the questions. How do such structures come about, and are they still built today?
I think it's basically the legacy of old days, when Korea first developed the big business back in 1960s or 70s, and then the government tried to develop homegrown a few the big companies. So, and but in Korea didn't have enough capital, so that this kind of very complex structure was probably the only way to have to expand into different businesses. But that's back. But that's then. But now we live in a different era. So now the problem we have at the moment is how to entangle that the legacy, the complex structure of big conglomerates in Korea. But it's basically started from the historical reasons.
Basically, this Korean chaebol, it's called chaebol in Korean, conglomerate model was copied from Japanese model. In Japan, they're more advanced back then, and Korea, as you know, was under influence of Japan for many years. So when they saw how Japan developed, the Korean government basically copied the model. So create a national champion by allowing them to own, company A, and then money you earn from company A, then you buy company B and C and D, even though they're not maybe necessarily related type of industries. And that's so the interesting you mentioned the Samsung group, that they're one of the oldest Korean businesses And so that's the legacy. But as you show in the diagram, there are many companies that are owning each other. But if you really analyze Samsung Group now, there's only one company that is worth a lot. That's the Samsung Electronics. That's over, I think, 450 billion. But the rest of the other companies, although they look, interesting in the graph, they're like really small dots now relative to Samsung. So what these Korean jabbers or the conglomerates have figured out now is that, the old model of owning many companies, owning bits of these companies and, creating, many small businesses, small entities is not as good as creating a one large one that can be very global player. So that's why a lot of Korean conglomerates, they're in the process of breaking up these ties. Also, the Korean law, by the way, does not allow this type of a cross-holding structure anymore. Although there are some lawmakers that wanted to sort of force these companies to break these structures, but at the end of the day, basically, no more in the future. But they let these the old style to remain. But because of tax and other reasons, it's becoming more practical for them to unwind these type of ownership structures. So I think it may take a little bit of time, but so Samsung, this ownership of each other will probably remain for a while. But I think if you fast forward 25 years from now, I think these type of structure will be probably thing of past.
I think it takes time. Yeah, but that's natural. Unless you have drastic measures, it takes time, and it's difficult to have the drastic measures in a democratic country. And the Chen mentioned Japan, and Japan, the same complex, the structures actually were dismantled by the General MacArthur when the U.S. Army occupied Japan after the World War II. They just dismantled all these conglomerates. And now it's impossible to do the same thing, so it takes time, but it'll be done, I think, in the future in Korea.
Yeah, but for investors like us, sometimes these type of weird structure or complex structure provides an opportunity, because the general reaction would be like, you're a foreign investor or who's not familiar with the Korean market. You look at the structure and how do I invest in any of these companies? So you pass on to another target. Yeah. But for us, for every complex structure, there is maybe a key company, or there's a company that it looks like it's kind of intertwined, but it's actually at the end, or it's not really. It's a part of a larger complex structure, but it's actually simple in terms of its own, ownership itself. Then that could be an interesting target for us. So when you're in that kind of a complex structure, in the middle of the Chaebol structure, then there is automatic discount. But from time to time, some companies, although they're part of the conglomerates, their ownership structure is toward the end of the web of the organization, or maybe that company, used to be a private company but may go public in the future, or has just gone public. Then sometimes these discount is not fair for that particular entity. So that has happened. So for us, these type of complex structures, because we're in Korea, we're familiar with this type of structures, we're familiar with the accounting treatments, and then how these structures were originated. We're able to pick the sort of the bad ones, or actually good ones, from these bad entities.
So it's an opportunity to us, sort of.
How do you profit from such structures? So one model is that you invest in a company at the end of such a holding structure, and if it gets listed or something, the discount goes away, or?
Yeah, or it's already listed, but there is a big discount, but then there's a discount to, just because it's a conglomerate, they have automatic discount, but later people find out that it's not that the discount, maybe holding company level, there should be a discount, or if it's company owns A and B owns C, then there should be a discount. But if there's one company that is just at the end, part of maybe holdco, but is separately managed, independently operating, and it's got good features for the future outlook, then that discount should go away, but at the same time, the company itself must be competitive. So for the values to be unlocked or recognized by market, not only the discount factor, but if the company itself is growing, even if there's a discount, the stock price will move up. So meaning for us, we have two ways of making money, right? One is that we find the right company, they continue to grow or become competitive. So even with discount, the value increases. At the same time, there's a chance that people recognize that this discount is not fair or is too much, then that the discount tend to get reduced. So that's how we play with this type of conglomerates or holdco type of situation.
I think when there is a discount, some investors are actually confused because when there's a discount, some people might think that the stock cannot go up, but it's a different thing actually. So let's say that the stock is valued, the value is 100 and there's a discount, 20%, it's 80. And the value, the doubles, then it becomes 160. So still 20% discount, but the stock price can go up if the value of company, the underlying business improves. So the existence of a discount, unless it widens, it shouldn't be a reason not to buy a stock.
And as you know, Tim, I mean, the holdco discount is not just relevant in Korea. Berkshire Hathaway is always discounted. SoftBank is discounted, and so it depends on. So
it's always. Yeah.
So what we like is not the holdco itself, but sometimes we want to buy the subsidiaries which are also listed. So the discount is always. I think there should be a discount at the whole company level. But at the subsidiary level, operating company level, maybe the discount is not sometimes not warranted.
Yeah, the Berkshire Hathaway is a very good example. It's always traded lower than the sum of all these underlying businesses. But stock price always over a long time it goes up because the value of underlying businesses because they go up. There's always discount. But the fact that in Korea, we have a lot of conglomerates, so we have more discounts. But in other countries too, the complex businesses, holding companies are always traded at a discount. That's a fact.
And then I know we're talking about the conglomerates and Korean discount, but like I said, there are 2,000 stocks. And there are conglomerates, but there are just many independently owned companies that are not part of this old legacy. In fact, nowadays, the valuable companies are non-related to each other. Like, it could be, for example, an internet company, which was not part of the old legacy business of conglomerates, or pharmaceutical company, or some new technology related businesses. They're not part of the conglomerates, and so there are plenty of opportunities. I mean, we're choosing 25 to 30 companies in general. So even if we have a rule saying we don't want to touch any of the conglomerates, we still have plenty of opportunity, given the fact that we're able to pick competitive 25 to 30 companies.
You already mentioned Berkshire Hathaway, and this holding has a great shareholder culture and created value for the shareholders over the long term. Do you have such holdings like Berkshire Hathaway in Korea as well?
I think the Berkshire Hathaway is unique. So in terms of a relationship with the shareholders, even in other countries, not just Korea, no company is quite the same as Berkshire Hathaway. So in Korea, we have many conglomerates, but some companies we have some issues regarding governance, but basically it's improving, and so it's more and more the companies they care about the minority shareholders. It's changing, but no company is quite the same as Berkshire, with the same for other countries too, I think.
Yeah, so Korea for many years had bad reputation, being not shareholder friendly, but it's not accounting fraud or cheating or underhand transactions, but it's more like treating other shareholders unfairly, meaning they never pay dividends. They don't necessarily make the best capital allocation decision. You have an extra cash, you have choice of investing in your core business versus buying hotel. Sometimes they'll because of the family's whim, they decide to go into hotel business or something, which is not as profitable or not as capital efficient. So that's been the problem. But lately, because I think, as I mentioned earlier, there's NPS, which is the largest shareholder. They're trying to become more like a Norwegians, the MBM, and then the CalPERS type. So they become a little bit more vocal. And as this, the Korean stock market gets bigger and bigger, there's obviously foreign influence, very sophisticated foreign investors also come in and make their displeasure or their intent to be known. And also people like us in Korea, there are a lot of active managers are becoming a little bit more vocal about things. But if you think about it, at the end of the day, if the stock price remains low, the biggest loser in that case is the largest shareholder, which is the conglomerate owners. So I think nowadays there's more sort of consensus being built that what's good for the company and good for shareholders having the stock price to go up. That means you have to be a little bit more considerate about treating other minority shareholders. That is paying back dividends, buying back shares, and then making the proper capital allocation decision.
And also we have, so basically Korea is very entrepreneurial. So we have many new companies developing just every year. And if you look at those companies, many of them already have outside shareholders even before going public. They're venture-backed and also private equity funds. So they have basically better governance compared to old conglomerates. So we have more and more such companies. So that also a big change if you look at large Korean companies.
You already mentioned activism. Is there activism happening in South Korea? And how would you do activism if you want to do it in a good way?
Right. So the activism, I think, is now, I guess, it was not a familiar word like 5 years ago, but now I think everybody knows what activism is about because Elliott Management, which is one of the largest activist fund, have invested in Korea, made a big news, investing in Samsung and Hyundai Motor, which are the two large companies in Korea, and also their local activists have started. And as I mentioned, NPS, for example, they have voted against management in shareholder meetings and so forth. So this is now becoming more relevant. But still, I think compared to US or Europe, I think the activism type of investment is still very small, but I think it's growing. And I think from our perspective, talking with the management, asking them to do the right thing, I mean, that's common sense approach. It's not, really asking them to do anything quite difficult, right? Look, you have this amount of cash. You haven't done anything with this cash for past 5 years, and then you're not really growing that much. Then best thing for you to do is return cash to shareholders, which is common sense thing, right? So from our perspective, the best way of approaching this type of activism is, talk common sense with the management and show them, how the math works. And like I said, once again, the biggest beneficiary would be themselves because they own the largest amount of shares. And so, because Korea is part of Asia, Asian culture does not really like, people insult you on your face or writing nasty letters. So here would be, I would say, more shareholder friendly type of engagement is I think the right approach. And we've done some of that, and I think it's the same thing in Japan, but it's definitely going to be something that would become more and more relevant in the investment space.
I think basically if environment changes, the companies also change because the more and more people become more vocal, then I think the companies will respond. And one of the difficulties in Korea in terms of activism is that most listed companies have large controlling shareholders. If you have if a company has the controlling shareholders large amount of shares, then it's inherently difficult. So it's very difficult to force them to change. So we have to persuade, and we have to change the environment. Then the companies probably will change. And that's is actually it's changing, but maybe slower than many people hope. But it's changing. That's a fact.
Are there any great Korean capital allocators you could recommend outsiders to study?
Yeah, I mean, there's some. I mean, I don't know how much you're familiar with the Korean businesses or listed companies, but for example, I think LH&H is an example. It is a part of LG, the conglomerate, but it's LG already has a holding company structure, and it belongs as an operating company, but it's a company that is professionally managed. This CEO is used to work for Procter & Gamble, educated in U.S. So he's been sort of using the capital, acquiring many different related. This business is really in the H&H stands for health and household. So they own like the cosmetics, the drink, the Coca-Cola. They also, for example, they own Coca-Cola bottling company in Korea. So they own this type of consumer-related products. But he's been able to use that extra cash to acquire other competitors and other businesses and continue to compound the business. So that he will be an example, and I think there are a few more. I mean, but once again, the M&A culture is not as what's the right term? It's taking place, but U.S. You every day you get up, you see one company merging another company, and as if the CEO's job is to be an M&A specialist, and because you have incentive to grow your company, and your whatever compensation is tied to your stock price and so forth. So there's a little bit of, I guess, if you don't do anything, then you're as if you're not doing your job. But so we don't have that kind of culture here. But I think it's gradually and slowly it's changing, and sometimes I think for CEO, proper job is say no to certain mergers. I know a lot of mergers end up being, capital destroyer. So just because you're acquiring companies, that's you have to acquire the right companies and then have the right the post merger plans. But here I think I see that some good allocator is not doing the deals and just returning cash to shareholders. I think that would be another example. We have some of the companies like that being paying out substantial amount of their extra cash to shareholders.
Is it common in South Korea that companies hold a lot of cash on their balance sheet, like it is in Japan? And what is the reason for this? I've heard that Japanese companies needed this cash because banks are bad with financing in Japan.
So it's Korea is in a way it's similar, and that the lending is not vibrant, and that's one of the reasons. And another reason is in Korea we had the very severe financial crisis back in 1997. Before that, most companies in Korea were leveraged, and after going through that crisis, it changed everything. Most companies, they thought that they for the next crisis, they thought that they needed to accumulate a lot of capital. But things changed. Now it's more than 20 years have passed, but still a lot of companies, their sentiment is still tied to that financial crisis. That's probably one of the biggest reasons why some or many Korean companies they sit on top of a large amount of cash.
Yeah, so during the Asian financial crisis in 97, 98, many actually large companies went under because they're very levered. So the ones that survived have that kind of sort of the still bad memory of company being too much levered, and so they end up being under levered or over cash. And then, as you know, after the Asian crisis, the Korean companies start to recover, and then they basically went through the global financial crisis, which was more U.S. driven, but still they kind of saw the same thing. Although a lot of Korean companies actually were not that affected because they already were holding a lot of cash, and so basically they're kind of reinforces the idea that holding cash is good. And then even during the pandemic, although in 2020, U.S. government quickly print out money and then everything was back to normal quickly, but initially, some foreign investors have started to call us saying, now it's time to invest in Korea because Korean companies have a lot of cash and they're not going to go bankrupt. So depending on the market situation, depending on the how things are happening, taking place globally, sometimes having some cash balance, I think is good for the shareholders. However, in Japan, they went too extreme, and Korea to a certain extent, but it's also a function of these Korean companies becoming very profitable. So it's not their intent to just sit on cash, but they just keep making money.
Do you see sophisticated buybacks happening in South Korea, like that people buy stocks back when there's a discount to intrinsic value? Or are there any buybacks at all in South Korea?
I think that the buyback in terms of the amount of buybacks, it's quite small compared to the US. But on the other hand, when you look at the US situation, most companies buy back their shares at an elevated price. So that's not the sensible way of buy back their own shares. So it's the opposite. But Korea, I think the traditionally buyback to the shares to increase shareholder value has been somewhat rare, but it's increasing. That's a new trend.
Yeah, so larger companies like Samsung, Hyundai, they start doing it, and then a lot of mid-sized companies are starting to follow. And also, like I said, they are sitting on cash, and then, if they have no, any plan to use that cash, the best way to use cash is buying back shares. And buying back shares definitely more favorable in terms of tax treatment for the business owners. So I see that whenever stock price is down, they tend to buy back shares and then also just keep the stock price competitive. I think some sophisticated CEOs have started to buying back shares. So it's not as active as US in any way, but it's definitely have started. The movement has started.
Is there a dividend gift culture in South Korea like it is in Japan? Like people get pens or food or whatever as a dividend gift, and this is popular for stock owners to wait for such presents as a dividend?
No.
I mean, it's not as dividend, but you go to shareholder meetings, they give you for example, for the people that come to shareholder meetings, they give you maybe pen or something as a sort of gift, but it's not as a part of dividend.
Okay, then it's just a Japanese thing. There's one guy that made it very popular, this kind of gift culture, and made also stocks popular. Let's talk a bit about the IPO market in South Korea. Is it a bit like Germany? Like we have many interesting companies that aren't public, that are held private, and they don't need to go to the stock market? Or how is it in South Korea? Are companies easier gravitating to the stock market than they're doing an IPO?
I think that most private companies in Korea who want to go public are mostly in the technology industries, and they have financed by venture capital funds. So usually those outside investors have to exit. So they always think about going public. So it's quite vibrant in Korea. Most companies, those type of companies are not family-owned traditional businesses. They are mostly venture-backed technology companies. So just the path for them to go public. So it's quite natural, and that's very vibrant in Korea. Actually, if you look at the Korean venture capital industry, it's quite sizable now, and the venture capital, the funding, the investment size of investment compared to the GDP, is Korea is only behind the US and China is third in the world. It's quite vibrant. So as many companies go public, and a lot more these days than before. So it's different because it's all mostly they want to go public these days.
Yeah, and also, I guess the unicorns are, ones that could go public anytime. Surprisingly, of course, the U.S., China, and there's India. I think after that, maybe UK and Germany. I think Korea has the most number of unicorns. I think maybe 12 or 13 at this point, and there's more smaller ones that are going to be unicorns. So I understand in Germany, somebody have joked that all the good companies, they never go public; they just stay within the family. But here, we don't have that kind of mentality. So most people want to go public, and also it's usually a sign of success. Here, when you operate a public company versus private company, even though a private company may be bigger or more profitable, the people tend to recognize the public companies more. So here, all the good companies, there are some exceptions here and there, but generally speaking, they end up going public. So if you're an investor in Korea, there's an opportunity to also get access to these great companies. They're coming in from the new IPOs.
So in Korea these days, it's quite rare that the large, sizable private businesses to stay private. It's quite rare these days in Korea.
How are you profiting from IPOs, and how are you playing IPOs as an investment case?
Yeah, so when we analyze companies, as you know, generally we look at public companies, but as a part of our analysis, we have to look at their competitors, new players, and so forth. And then oftentimes they are non-public companies. So we do have sort of the good knowledge of, the sizable non-public companies. And as Albert mentioned, they could go public anytime, because of the sort of the trend, and then these companies are typically backed by private equities or venture capitalists. So we do pay close attention to them, and when they go IPO, we look for the right opportunity to buy into these companies. Sometimes, given the market sentiment, we can go participate in IPO, or oftentimes we wait until the company go to IPO, and then usually there's a pop and then there's a decline. Then it allows us to buy in these companies at a discount price.
With Petra Capital, you're investing since, I think, 13 years in South Korea. If I would have a time machine and go back to the year 2009, where you funded the business, and talk about your portfolio at this time, how would it be different? What kind of stocks would I find in there that I don't find today?
So basically, we buy undervalued companies, and undervalued companies always in different times in different industries. So if you go back to 15 years ago, we probably would have bought that undervalued companies in that time. So basically, we actually are agnostic to industries. So probably back then we have bought undervalued companies in a different sectors than now. That's how I think about it.
Yeah, I think the market's changing so fast that you have to adjust. We were a value investor in our heart, but value could mean different things for different people. And I don't know, 15 years ago, maybe, you mentioned net nets, but net nets were more attractive back then than now, for example. But 15 years ago, we would have bought companies that are more, cash flow focused, like, Coca-Cola type of companies would be a good example that would have bought that have a stable cash flow. But for example, you fast forward now, whatever was stable cash flow for the past 5 years, sometimes it's not as meaningful because things are changing so fast, and they're newcomers and with different models. So, to be a successful value investor, I think you have to find, of course, the undervalue opportunities or discount opportunities, but discount or undervaluedness could come from different factors.
Is the change in the Korean stock market to a more tech-oriented stock market also affecting you, your models, your thinking?
So we now own more tech companies. That's true. But that's not because we just bought for the sake of buying technology companies because it's hard. But we just found that more competitive companies now in technology sector because, as I mentioned before, many Korean companies in the technology sector are growing very fast and very competitive. So that's why probably we own more techs.
But also, it's tech. But if you think about it, is Amazon a tech company? I mean, it's a tech company, but it's a retail company. Basically, it used to be, people go to physical places to buy things, but now people buy online. So there's a change of how people behave or buy things and sell things, and I think Korea is definitely going through that same process or changes, and we find opportunities in these type of tech companies, but I guess some tech companies are more tech driven, like a semiconductor company, but some like internet businesses, it is tech company, but we kind of view it to be more either a consumer brand or sometimes retail. So, I guess the notion that we could categorize these companies by different sectors sometimes is not, I think it's not exact science. So basically we go whatever opportunity is. And as you mentioned, in nowadays, especially in the past few years, there's this transformation of sort of everything going digital. And so a lot of companies that we own in tech sector are the companies that are going through that changes or also the beneficiary of, digitalization of contents and products.
And if you look at the US, the market, US stock market, many of dominant companies are dominant in other countries too, in most countries in the world. And Korea is one of the exceptions. In Korea, we have our homegrown domestic companies that are dominant in many areas. That's why we have many opportunities in that sector in Korea.
I think, Tim, and I had mentioned this to you before, everybody in the world listens to, when they listen to music, they use Spotify. And that's sort of the global brand, or that's what everybody seems to use. But Korea, there is a company called Melon. Its brand's called Melon, but now it's part of Kakao Entertainment. But it was almost 10 years before Spotify, they're already doing the streaming music. Although it happened that they were only operating in Korea and nobody else was doing streaming music because they didn't have enough, the proper infrastructure, and you need to have a proper streaming. You need to have a fast internet, fast devices. So Korea was the first one to do it, and so you come to Korea, still Melon is number one. Spotify has very small market share. However, I guess not a problem, but the limit of that company was that it only grew within Korea, and their upside is pretty much limited. So since then, a lot of companies that become successful in this type of, innovative products or contents realize that the opportunity is bigger outside of Korea. So you see a lot of Korean tech companies or, the contents providers have gone to Japan, have gone to China, and then they move, their business model outside of Korea, and they become much bigger companies. So I see that as a very positive change.
Korea seems to be very export oriented. So do you have a rough idea about the revenue share that goes to export and that is Korean in your companies?
Okay. I think our current portfolio, maybe I'll talk about general market. General market, because Korea is, you saw the land is kind of island, so they had to earn money outside. So now I say if you look at the company level in general, 70% is probably export oriented, or maybe even more, and 30% domestic. Yeah. However, the companies that we own, probably, I would say maybe 50-50 at this point, because it's not by just our choice. We go whatever is the good opportunities, and we see some of the domestic companies are still growing within Korea, more like domestic internet businesses and so forth. So, right now it's probably 50-50, but you want to add anything, Albert?
So actually, one of the companies we own, their revenues, more than 95% of the revenues actually come from outside of Korea. That's one extreme example, though.
But interesting is that it's not the traditional company you're thinking about, the Korean shipbuilders or Korean Samsung selling, cell phones. I think the 95% revenue Arbor's talking about is it's actually a renewable energy company. It's a wind power company that probably nobody outside the investment world and also the wind power has ever heard of. But somehow this company figured out their business model, and then they just went global from the beginning. And also the fact that the wind does not blow strongly in Korea. So that's another reason why they were not able to make it big out here. But with their technology, they went global. They went Europe, US, and they're 95% of their revenue from overseas, but it's in the renewable sector, not the traditional sector you're thinking about, the machineries and the manufacturing.
How many stocks do you hold, and what kind of stocks are these?
So we typically own around 20, but at the moment we own fewer than 20 stocks.
How do you decide to invest in a new stock, and how do you decide how to size certain positions? Right?
In terms of sizing, we own probably as low as 3% to as high as 10%. That's our typical way of sizing. And it depends on the competitiveness of underlying business, also how much is undervalued. So there are many factors, and that's how we size our portfolio.
Yes, as we mentioned earlier, we're sector agnostic, so we go wherever the opportunity is. But when you, it's oftentimes a lot of value investors get into trouble is any given moment there's a certain sector that will be heavily undervalued or discounted for right reason. Like before, it used to be like oil and gas, for example. There used to be like a bank. Sometimes would be, and then if you end up buying a whole bunch of banks, that's not that's not good for you. So part of our portfolio construction is risk management. So yes, we go for whatever the highest discount is, the undervalued is great, but we do look at risk factors, meaning we don't want to put all of our companies in from one industry or several industries. So we do think about those things when we pick companies. But if you look at our portfolio, it's a pretty well diversified sector allocation at this point.
So if I look at your portfolio, what is the size of certain styles? So how many compounders do you have? How many special situations are you invested in?
So it also depends on the environment, but at the moment we own, I would say, more compounders than other times. So it depends on the opportunity set at the time.
Yeah, because as you know, Korea is still one of the cheapest markets in the world. And, 2020 was an unusual year that Korean market did perform very well after the pandemic. But prior to that, it was always underperformer. So we still think that some of the companies that remain, despite the stock price going up last year, is still very undervalued, meaning that they could compound or grow even further, especially when things reopen. And I think the trend, I know there's a Delta variant and there's all kinds of uncertain factors, but at the end of the day, I mean, we expect the economy will go back to normal. And then Korea being net exporter, they're likely to benefit from the reopening of the global economy.
How will the companies you own profit from the reopening?
Because they're exporters, meaning, as Herbert mentioned, some of the companies they get more revenue from overseas, and as their brand gets stronger, they make more money. Maybe initially their 50% of their revenue was from overseas, now becomes 70%, 80%. What's popular in Korea now popular in Singapore, Japan, China, maybe even in Germany. So, whereas more business activities, I think these Korean companies are likely to benefit from the increased business activities among the global buyers.
But then again, rebound and reopening the related recovery is sometimes for many companies is just one time. And we look at many companies, they strongly rebounded recently, but the performance before the pandemic was not good, and that in that case, their fortune won't change after their one-time recovery. So we focus more on their long-term outlook instead of the one-time recovery.
Maybe you want to share one or two examples of co-founders you invested in, and maybe also tell us why you like them and why you invested in them.
And one company I would talk about is a company called Kakao. It started as a messaging app similar to WhatsApp. And Kakao started but before WhatsApp and other messaging apps in other countries. And when it first came out, we just didn't do the chat with using that messaging app, but we just look at how other similar companies are doing in other countries and how it could make profit in the future. So we look at many related industries and the industry where this company could morph into, and whether there is already a dominant player in related sectors or many things. And some companies in other countries, for example, let's say in China, that there's a WeChat, they probably went ahead and started to make profits. And we'll look at the Kakao and whether they can do similar things in Korea. And we just realized that Kakao has a potential to go into other related business and leveraging the massive dominance of their messaging app in Korea. And that's why we look at this Kakao. But when we first bought Kakao, and it was because many investors in Korea didn't realize their potential value. It was traded at a very cheap price, and all of a sudden, going through the pandemic, people realized the potential value of this company, and we realized and we knew that the company's intrinsic value is growing and still growing. So that's one of the compounders we own at the moment, and it's one of the successful investment of our portfolio.
Just to mention about Kakao that it's 90% of the Korean population uses Kakao. So I know in probably Europe you use WhatsApp, right? And like in like China, WeChat, it's kind of regionalized, but Korea is, but still 90%. And so with that type of customer base, they actually developed into like an Uber type of text hailing app, which is their number one. They also, as I mentioned about the streaming music, they acquired this company, Melon, to service streaming music. And then they also went into other contents building business, like the webtoons. I don't know if you're familiar with that concept, but it's the cartoons or the comics you read online. And also they went into fintech. So because of their dominance in the chatting or the messenger app, and with the right CEO, they're able to grow their business into related businesses. And that's why, for example, in the US, you have Facebook, you have Uber, you have PayPal in different companies, but within Kakao, you have everything in it. There's the messenger app, fintech, text hailing app, and even now games added as well. So, yes, they're lately, getting into a little bit of regulatory issues of antitrust law and things like that, because they're becoming bigger and bigger. But overall, I think they have, reached to a certain point where they're going to be dominant for many, many years, and they're going to be more profitable.
So it just started as a messaging app. Now it has morphed into big business, which are dominant in many different areas. Basically, as Chen explained, this combination of Facebook, PayPal, Uber, and also the large internet bank and in the mobile game, just many different fields are dominant in Korea.
And then how they structure, also interesting, is that instead of doing it in one corporation, they have created each operating company separately with different CEOs. So although it is part of Kakao, they work independently and then compete against each other. And then each time they spun off the business, they have received investment from global private equity firms or another players like Tencent to keep their valuation going, and some of which were IPO'd, which actually definitely had a positive impact on the Kakao stock price. And we think that there is going to be a few more entities that will go IPO. So this is one of those compounder with a catalyst that would add value to the total valuation. And Kakao, I think, is now top 5 companies in Korea, over 70 billion market cap. And it was a very quick rise, but it was sort of a lot of work that were done that made them to be ready to go into the big empire.
With your portfolio, how are you playing the change to renewable energy? You already mentioned this one wind company and also a battery company. Hey, Tillman here. I'm sure you're curious about the answer to this question, but this answer is exclusive to the members of my community, Good Investing Plus. Good Investing Plus is a place where we help each other to get better as investors day by day. If you are an ambitious, long-term oriented investor that likes to share, please apply for Good Investing Plus. Just go to good-investing.net/plus. You can also find this link in the show notes. I'm waiting for your application. And without further ado, let's go back to the conversation. So maybe let's go back to the beginning and link our conversation with it. We talked a lot about culture and the uniqueness of South Korea. So if you think of an outside investor coming to Korea, what would he miss if he wouldn't invest with locals and doesn't have the local knowledge?
I think the people outside of Korea, unless it's a very sizable company like Samsung Electronics, sometimes it's difficult to understand the business. I mean, not just business, but the culture. Because when you make an investment decision, one of the most important factors is the management. And it's very difficult to understand the capabilities of Korean management because of the language barrier, cultural difference, and sometimes you have to be on the ground. So those factors are, I think, that the difficulties the most foreign investors face when they invest in Korea.
So it's kind of similar things that you face in investing in Japan. In language, I would say if you have to pick two countries that speak the worst English, it's probably Japan and Korean.
Yeah.
But because, I mean, the younger generation is different, but I'm just saying in terms of language, I mean, this is another interesting point, but, the Korean language is very, very different from, if you have to pick one language that is very different from English, the Korea will probably rank, the top 3. Whereas like German, Germans, basically all from alphabet. So I know you speak, very fluent English. I think, of course you're probably a good student, but, for Germans, it's more natural to learn English. Whereas for Koreans, it's completely different. The word order, even the sound, and so especially older generation, people, they have difficulty learning English, or while they may be smart in their own way, they're not good at expressing what they want to do in English. And also, we also see that in disclosure statements. For example, in Korea, disclosure rule is pretty good, but they're not required to produce in English. So if you look at the Korean version, would be maybe 100 pages, very detailed, and they produce an English version would be like 10 pages summary. So for non-Korean speaking person investing in Korea, you have this disadvantage. Even though the larger companies, they produce everything in English just for sake of their IR purposes with the foreign investors. And then also another thing is the diagram that you showed us earlier, the complex, the Chaber structure. So their whatever bias, they see anything complex, they'll say, oh, they must be doing something questionable. This is not analyzable. But so they have a good excuse saying, oh, I don't want to do work. Whereas, for us, like I said, it is not always the case, but sometimes we find opportunities in cases like that. And so that's, another, big disadvantage when you're not familiar with the market. And also the Korean history, as I mentioned, it's long, 5,000 years. But if you look at the Korean capitalism history, it's relatively short. It only started in the 1970s. So for people who, been in Korea for many years, studying Korean markets, Korean history, Korean financial markets, we know our knowledge about the Korean market is much deeper than, I don't want to sound pretentious, but if you're investing in New York, investing globally, yes, maybe your knowledge level may be higher in terms of the investment in certain sectors. But when it comes to investing in Korea, we do have a competitive edge because we know the history inside out, dynamics, why this company went bankrupt, why, and which family has bad reputation, good reputation. So I think that's inherently difficult. It's kind of similar problems that a lot of investors have in Japan, international investors have in Japan, but kind of maybe more extent because
we found out quite interestingly that many US or European investors, they understand Southeast Asian companies better than compared to Korean companies. So I think that, as Chen mentioned, Korea and Japan are probably the hardest to understand. And sometimes foreign investors, they come to Korea to meet some companies. I'm not talking about the really big, large companies, but small companies, and they bring an interpreter, translator, but still they misunderstand. It's very difficult, actually.
Yeah, and also the fact that the sort of the global banks like Goldman Sachs or JP Morgan, they only cover larger companies, and so like a company like CS Wind, I mean they certainly cover LG Chem, very deeply, but like a company like CS Wind would never come to their radar. In fact, even among the Korean brokerage firms, there's not much coverage when they were small, but now there's a lot of coverage, and now there's also English coverage, but there's definitely opportunity for us to get in there before the company becomes large.
How fast is Korea changing? I've had some discussions with Chinese investors and they say you have to have people on the ground to understand the change. And even after 2 or 3 years, it can be totally different. Is Korea changing that fast as well?
But still changing very fast. At the development stage of China, of course, they at that stage is changing very fast. In Korea, back in the 80s, I think that China, the current stage, the development stage of China is more similar to 80s or early 90s of Korea. And the Korea changed faster than now. But still, we think that Korea is changing very fast. It's quite different from 5 years ago, even more so compared to 10 years ago. Very fast, actually.
Yeah, probably, less lesser pace than China for sure, because Korea is no longer growing 7%. It's more like growing at 2%, 2.5%. But certainly, I talk to people, friends, that visit from Europe or US. They're regular visitors, and then every time they come here, what happened to this tower? Or now we have all new devices. So it's definitely more changing, and also especially younger generation. I think I mentioned about the lack of language skills. I don't know, maybe that's the problems a lot of parents had. So I think the new thing for Korean parents to do is send their kids to overseas, learn English and other languages. So you see Koreans all over US, all over Europe. I'm sure you see a lot of Koreans in Germany as well. So when they come back, they bring in sort of different views, different perspectives. So that's making changes. So some traditional people, they don't like it. Why is Korean people dying, young people dyeing their hair in this color, that color, the way they're dressing and things like that. So there is that sort of the conflict between the generations, which is another topic to discuss. But so we see a lot of that taking place. I have three sons in high school, one in high school, junior high, and elementary school. Their mentality, even amongst the elementary school student to high school, quite different. Because one kid, he's used to just using cell phone only. He kind of skipped the computer, went to cell phone. Whereas the older one, he used cell phone all the time too, but he started his internet with the computer. So that how they behaved, how they enjoyed their, the products and then contents, it's already different. So it's probably the product of both world changing and also Korean people adapting fast to this type of environment.
For the end of the interview, I want to give you the option to add something we haven't discussed. Is there anything you want to add?
The one thing I want to add is actually that still many foreign investors, when they think about Korea is dominant by the cyclical industries. That's right, if you look back at 5, maybe 10 years ago. But now if you look at the largest companies in the Korean stock market by market cap, it's all high-tech, all new economies. We have two semiconductors and two bios, two mobile platform, the EV batteries. It's all changed. If you look at all around the world, only probably the US stock market is comprised by the new economy companies. Of course, I'm not talking about their valuation, but it tells you about the transformation of the Korean economy. So basically, Korea used to be the cyclical industries dominant, but now it's secularly growing new economies. So I think that in that sense, Korea has a very good outlook.
Yeah, I think I want to add about maybe a different topic, but it's a coronavirus, how government dealt with it. Basically, it kind of shows how the Korean people are very efficient, or how they operate things. For example, I know Europe, I think most of you, in Germany and other countries are probably 70%, 80% fully vaccinated. But Korea, they were late on getting the vaccine, so still less than 60%, although we're going to get to 70% within a couple months. But just give you the sense of the number of cases, 50 million people in Korea, right? Cumulative cases, 300,000. Like Germany, I know it's 83 million, but 4 million, and the number of deaths, Korea less than 2,500, Germany 90,000. Like UK, maybe slightly bigger country than Korea. Number of deaths, Korea once again 2,500, UK 130,000. Number of total cases, 300,000 versus 7 million, or almost 8 million now. And so if you think about it, coronavirus started in China and came to Korea very fast. And at the time, nobody had vaccines, right? And it shows how Korea is very efficient at managing this type of crisis. And you saw the map as earlier, very intense, very, very dense. They all live in Seoul, but everybody's using subway, bus, public transportation, but things are
It's
fine.
still packed public transportation.
And so, I know I talked to colleagues in Europe and US, everybody's working from home, but for us, we really didn't have to work from home. I mean, we only recommended to those people that want to stay home for whatever reason. But right now, Korea is almost back, even when, the vaccination rate is less than 60%. So that's kind of showing you, and of course, there's a reason why they were able to, handle the situation well. But it's the contact tracing through the app. They have the efficient hospital system. Everybody's online. So for example, if I get vaccinated, I don't know how you do it in Germany, but everything's through online app. I can see which hospitals are giving these shots, and then exactly what time, where, and so things like that. I think there could be a little bit of infringement on the privacy issue for people who are infected with virus, and they got quickly found out, and then they were sent to this facility, and then they had to disclose who they were for lunch and dinner, and sometimes your hidden girlfriend got discovered in that process and things like that, which was an issue in the beginning. But at the end, I mean, it shows that Korea is very good at managing this type of process and crisis management. So what I noticed about Korea's upgrade is that whenever there is a crisis, Korea tend to do a little bit better. That's, as Arbor mentioned, 1997 Asian financial crisis. A lot of jobs were lost. Many companies went under. But after that, Korea became a different nation. And then during the global financial crisis, also when things were bad, but Korea was able to sort of upgrade itself and go more global. And I think this pandemic, for example, is another example how I think that the positive things will happen for Korea. And this is when people start playing Korean games, online games. They start listening to Korean music. Like, you heard probably BTS and some of the, like, they're not popular amongst the men, but certainly amongst teenager girls all over the world, they're popular. And there's, I don't know if you watch Netflix, there's a new, the drama called Squid Game became number one everywhere, I guess, in the world, but it's a Korean speaking drama. So either you can dub it or you can read subtitle, but it became number one. And I think the CEO of Netflix recently said that this program may become the largest success.
It's all-time best in the Netflix history.
Yeah. So the point I'm trying to make is this pandemic, is a very kind of a depressing time for many people, and it's a negative event overall for global citizens. But I think somehow that Korea is likely to use this opportunity to grow and become more competitive. So I think that certainly there's going to be a tailwind behind Korean contents business, which is drama, movies, music, and when these products do well, the Korean products become popular, just like Japan in the 80s. So we certainly think that even if they come up with a mediocre product, if the brand is good, they want to drink. Like, I think, and I may get trouble by saying this, but Starbucks, I mean, what do you like Starbucks? It's not, I don't think it's the quality of the coffee, but it's a brand and image. So something like that could happen for Korean companies.
For the next pandemic, I try to get an internship at your place because I think it's one of the safest places in the world if a pandemic happens. But now I want to say thank you very much for our interview, and also thank you very much to the audience. It was great that you joined us for that long, and
thank you.
I wish you all the best and say bye-bye.
My pleasure.
As in every video, also here is the disclaimer. You can find the link to the disclaimer below in the show notes. The disclaimer says, always do your own work. What we're doing here is no recommendation and no advice. So please always do your own work. Thank you very much.